From being one of the most crucial crypto banks to falling into the absolute pits of a financial crisis, here's why Silvergate is on the verge of collapse. And trust me, this is a very huge concern for almost everybody involved. To help you grasp what this truly means, let's get into just how fast this little bank rose to its absolute peak. Believe it or not, Silvergate didn't start with crypto at all. It started with real estate, and it didn't make the huge and risky leap to cryptocurrency until January 2014. That's when it started dealing with Bitcoin, and boy did it give them a tough start. This was one of the worst years for Bitcoin, seeing how it made a depressing decline from $770 in January to $300 in December. But then, fast forward a few years later, and things were better than anybody had ever expected. In 2019, the company was at $12 per share on the New York Stock Exchange, and it had just over $2 billion in assets. But don't let these numbers deceive you, because by the end of 2021, their assets had practically increased eightfold, which meant that they now had over $16 billion in assets. And of course, that meant an increase in the stock price too, which rose to $219. In just a matter of 2 years, Silvergate managed to grow so massively that investors just couldn't ignore it. I mean, no other bank has managed to grow so much in such a short period, seeing how banking in itself is a super slow-moving industry. But then again, it's important to know that there's a big reason for that. Silvergate wasn't your average everyday bank at all. For starters, it was almost exclusively dealing with crypto, which is a super high-risk decision for anybody to be taking. Not to mention, FTX had been one of its biggest clients. But as you'll see later, this might have become the primary cause of the bank's decline. But the trouble started back in December of 2022, when the bank announced that it had just faced a gigantic loss of $1 billion. All because of enormous asset liquidation. But if you think that the loss isn't that big of a deal, you're mistaken. This loss meant that almost 90% of the bank's tangible book value would be entirely wiped out. And this was when the bank lost almost all of its gains. It's almost impossible to imagine Silvergate surviving through this chaotic mess. But now that I've talked about the gist of what the deal with Silvergate is, let's get into the gritty parts of where they've truly gone wrong. The FTX collapse may have been the real beginning of this mess. In November of 2022, big firms like FTX and Alameda had over 20 corporate accounts at Silvergate. If you were to calculate their aggregate deposits, it would amount to more than $1 billion. But then, one of the greatest scams of the entire century played out right in front of our eyes, as FTX simply collapsed. And even though the bank hadn't lent any money to this firm, the entirety of the crypto industry was shaken to its core. Of course, people lost confidence, and a massive chunk started withdrawing their money from all exchanges. And almost everybody who was smart enough started liquidating their crypto holdings. The effects of that were more than clear in the bank's fourth quarter financial results from January 2023. This is when their deposits had dropped by almost $8 billion, which amounts to an alarming 61% decrease. Seeing just how many withdrawal requests they were getting, it's not surprising that Silvergate had to liquidate roughly $5 million worth of assets in the last quarter of 2022. But you may also be wondering where they even got all that money from. Eventually, the bank had to liquidate government bonds and mortgage bank securities. And since the interest rates had risen by that point while the value of the bonds dropped with every passing second, they sustained heavy losses. This is exactly how Silvergate ended up with a $1 billion loss during the liquidation process. But all this aside, the bank made some pretty dumb decisions. Simply put, it was almost exclusively focused on other institutions. Silvergate was mostly dealing with other companies, many of which worked with consumers. Let me give you an example. Genesis, DCG's now dead crypto lending subsidiary, was among Silvergate's earliest clients. Now, you might have guessed the problem here. The bank put all of its eggs in one risky basket, and it even created the perfect network to enable that. The creation of the Silvergate exchange network meant that crypto institutions like Coinbase, Gemini, and Kraken could transact in dollars 24/7. Of course, that was pretty appealing because no traditional bank would let crypto clients do that. But fast forward to now. Silvergate reported a $1 billion loss in its most recent quarter. And then on the 1st of March this year, Silvergate made a very unexpected regulatory filing. According to this report, the bank's quarterly results were even worse than before. And this may put things into perspective for you, because it made things clearer for most of the bank's clients. Reacting to all the recent information, Coinbase, Crypto.com, Galaxy Digital, Circle, and Paxos clearly stated that they'll no longer use Silvergate. Even Tether, the contentious stablecoin which has had its fair share of trouble with banking, rose from its almost grave. Just to remind everybody that it won't be using Silvergate anymore. However, this still doesn't explain entirely why these clients were suddenly so repelled. But it's pretty easy to guess that the suspension of SEN may have been the last straw. Everybody had gotten used to Silvergate as a crypto pass-through point, and there's a very important reason behind that. At the very least, stablecoins are backed by dollars and have cash or cash-like assets and reserves somewhere, which is why people just feel safer with them. The bank's simple job was to generate a token when a dollar was inserted into USDC, for example, and then to destroy a token when a dollar was removed. But that's me talking about the past. Right after the major crypto companies pulled out of the bank, SEN came to an end. A giant banner came up on its homepage, declaring that the discontinuation of the network was because of the high risk factor. And even though frantic customers emailed them for more information, there was no response. Heck, nobody even knows if this is a permanent decision. But according to Moody's Investors Service, it seems like Silvergate's core franchise has already gone away. And even if there are crumbs left here and there, they'll probably be gone real soon. After all, the Justice Department's got its eyes on it. It's one thing to be caught up in a financial crisis, but it's entirely another thing to also be simultaneously caught up in a possible legal battle because of some super suspicious transactions. Let's take Binance for example. According to Reuters, its independent arm, Binance US sent more than $400 million to a trading company called Merit Pink Limited. What makes matters interesting is the fact that the Binance CEO, Changpeng Zhao, is in charge of that company. Back in 2020, Catherine Coley wrote to a Binance finance executive asking for an explanation for the transfers. All the while, she called them unexpected and claimed that nobody mentioned them. Of course, all these transfers took place on Silvergate SEN, which makes things super sticky for the bank. Not to mention, this is super similar to some of the issues Silvergate is having with FTX. In 2018, Alameda Research opened an account with Silvergate. Bankman-Fried, the owner of the firm, actually admitted using Alameda accounts for FTX funds, mixing customer funds with those of the trading firm. All of which is pretty messy to sugarcoat it. But now that you see how the bank is practically stuck in the middle of financial and legal trouble, things might make sense. So there you have it. That's why Silvergate is on the verge of collapse.